Beauty is in the eye of the beholder. But for this company, it resides in the eyes, lips, and face. Investors may have frown lines, but will e.l.f. Beauty make up for a blemished sector and put on a happy face?
All right, what are we supposed to do with the stock of e.l.f. Beauty, the value-oriented cosmetics play that's long been one of my favorite growth stories in the consumer product space? Now, a little over a month ago, these guys reported what I thought was an excellent quarter. Apparently, they didn't raise guidance enough. The stock plunged 14% the next day. Since then, the stock's been put through the meat grinder. So could this be a buying opportunity? While we're out here in the Bay Area, we've got a chance to check in with none other than Tarang Amin. He's the chairman and CEO of e.l.f. Beauty. Mr. Amin, welcome back to Mad Money.
Thank you so much for having me.
All right, first, Tarang, I want people to understand, before we delve into the quarter, you are one of only 5 public companies out of 274 that has grown for 22 straight quarters. Was this quarter equal to those others or better?
Well, this quarter, we grew our net sales 50%. And just as importantly, it's not just 22 consecutive quarters of net sales growth. It's also 22 consecutive quarters of market share growth. So we feel great about our business.
Okay, that's important because a lot of people feel that the category has gotten very tough. We've seen basically the collapse of Estee Lauder. Even since I saw you last, we've seen Ulta have a hard time. We're not sure how Sephora is doing in Kohl's, but we know Kohl's isn't doing that well. Is that bringing down the whole group and therefore maybe bringing down your stock?
Well, certainly we've seen some softness in the category. I think last quarter, the category is down 1%. It's down 6% right now. Right. But the good news for us is we continue to build market share, even with the category being down. Just in this last period, we grew over 200 basis points a share, and that's on top of over 300 basis points last year. So we're really focused on the long-term share potential.
All right, so let's focus on that so people understand. Let's take a store like Target. I would presume then what you're saying is that you've actually taken shelf space during this period.
Well, we've definitely grown our share at Target. We're now their #1 brand for 6 consecutive quarters with over 20% of their entire category. And the reason why that's important is Target was our first national retail customer. So as others try to catch up, we feel really confident that over time, we can be the #1 brand. Nationally, right now, we're the #2 brand, just having passed L'Oréal Paris. And we definitely see #1 in our sights, and that's what we're focused on.
Now, is some of that because you've been able to have manufacturers that agree with you and been able to come underneath, or did the other guys just raise their price too much, Tarang?
Well, I think the core of our proposition is taking the best of beauty and making it accessible for every eye, lip, face, and skin need. And that's really the key to our success, is we can take inspiration from our community, the best products of prestige, and introduce them at a fraction of the cost. And that's what people really appreciate about e.l.f. It's an everyday affordable luxury.
Do I have to worry about the fraction of the cost if either candidate comes through and they start putting big tariffs on China?
Well, you know, we faced 25% tariffs on our China goods since 2019. And the way we mitigated those with a combination of price increases, FX, supplier concessions. We'll do the same this time, and the only other big difference is we continue to diversify our supply chain. So 5 years ago, 100% of our production was done in China. Today, it's less than 80%. In the future, it'll be less than that. But the key is finding like-minded suppliers who work in our model to deliver the best combination of quality, cost, and speed.
Well, let's start with the quality and cost. Now, I did do an experiment at home with some of the, last time I saw you, you gave me some cosmetics because you told me that my wife would not really understand the difference. So what I did was I put yours in front of some brands that cost 4 to 5 times, and she didn't notice. When you have head-to-head quality, do you often win against the really expensive brands?
Well, that's what our consumers are telling us. We often will see viral posts where a consumer, what we introduced our lip oils. They'll compare our $8 lip oil to a prestige item at $40. And we'll get testimonials. I actually like the e.l.f. one better because we tend to study these products. We put our own e.l.f. twist on it, and we really try to make sure we're delighting our community.
Periodically, I go to things, meetings, and dinners, and I see people from e.l.f. From all parts of e.l.f. And they all seem to own stock, and they've all done very well. What kind of stock plan do you have that they all seem to have stock?
Well, we're unique as far as we know in the consumer space. Out of 274 companies, we're the only company that grants equity to every single employee every year. And that, you know, if you exclude the named executive officers, we've granted over $180 million of equity in a stock that's gone up tenfold over that time. So we really believe in meaningful wealth creation, not only for the people at the top, but for every single employee that's struck.
Okay, one last question. How much of your success has to do with the fact that you did what I was always hoping would happen in corporate America. You have a board that looks like our country and not the old our country. Has that helped you?
It absolutely has helped us. I mean, it starts with our employee base, which is over 75% women, over 60% Gen Z and millennial, over 40% diverse. But we didn't want to just stop with our employees. So we're one of only 2 publicly traded companies in the U.S. out of 4,100 that have at least 2/3 women and 1/3 diverse representation. Well,
that's what you need. And the last thing I need to know is the traditional loyalty to the old brands that we all knew were the ones where, frankly, they took advantage, I believe, of their prestige. They're waning, aren't they?
Well, I think it's a combination of them waning and the strength we have. We're the #1 brand amongst Gen Z, among Gen Alpha, #2 amongst millennials. So we continue to pick up more consumers, and our value proposition, powerhouse innovation, and marketing engine is really resonating.
Well, that's why I think I don't really understand the fall in the stock, but I understand people worry about the category. You correctly brought that out. But you're the category winner, and the winner will out with both the sales and then ultimately the stock. That's why I'm still betting on this horse right here. That's Tarang Amin. He's chairman and CEO of e.l.f. Beauty. The stock's been down a lot, but it's because of the category, not because of e.l.f. And Mad Money's back after the break.
Coming up, is the future of AI built with a strong arm? Keep it here and flex your portfolio. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.